So hi everyone, I'm Jeff, ETF research analyst at Mirae Asset. Today I will share the recent update on China EV and battery value chain. So these are the contents today. First part will include updates on China EV market, including recent sales momentum, Beijing Auto Show, performance of key EV brands, and key policy updates. And in the second part, I will share the updates on the battery value chain. So in April 2024, the EV wholesale volume reached 790K. It was a 30% year-over-year growth, recording solid growth momentum for the second consecutive month. Major brands including BYD, Xiaopeng, and NIO all recorded accelerated growth. And interestingly, also according to CPCA data, April total passenger vehicle sales declined by 6% year-over-year, as many consumers actually adopt a wait-and-see strategy amid the vehicle price volatility throughout the month. Under such uncertainty, the 30% year-over-year growth of EV sales volume actually further pushed EV penetration to 44% in the month, indicating further popularity and share gain for EV in China market. Now let's look at Beijing Auto Show. The 10-day Beijing Auto Show actually attracted around 900K times of visits globally, with over 110 new model launches, including 30 new models from foreign brands. NEV was the key focus of the show, with over 270 NEV models displayed during the show, including new EV models from these traditional luxury brands such as Mercedes-Benz and Porsche, etc. And also, we are seeing more global visitors, including media, dealers, consumers, and company employees and executives participated in the show, indicating that China auto industry is actually gaining global traction. Another interesting observation is that we are seeing the stepping up of corporate executive as the top salesperson or say marketing person. For example, we see Xiaomi's chairman Mr. Lei Jun and Sanliuling's chairman Mr. Zhou Hongyi actually attracted huge traffic both offline and online, effectively gaining great attention for their brands and their products. We see these technology companies disrupting auto sales and marketing landscape through leveraging personal IPs of these top executives. And companies with large fan base as well as unique cultures, such as Xiaomi, are poised to benefit. And also on Beijing Auto Show, we are seeing wider application of intelligent driving, especially for EV. And intelligent driving is becoming an increasingly important selling point for EV. The L2 Plus Advanced Driving Assistance System, ADAS, is commonly seen in the mid to high-end new EV model displayed. Some leading EV brands are focusing on self-development of their ADAS system, while the other smaller brands or foreign brands, traditional brands, are more relying on a partnership model. In addition, with the rapid development of artificial intelligence in the past 1.5 years, we are seeing more and more application of this end-to-end large AI model in auto sector. Auto brands such as Xiaopeng and tech companies such as SenseTime actually display the end-to-end AI model in intelligent driving, which effectively enhance the information processing capability and the capability to cope with these more complex road conditions, while reducing the amount of manual coding input needed in this intelligent driving system, which effectively expand the use case of intelligent driving. On another note, Tesla is reported to have passed the data security test in China and could be further receiving further approval for its full self-driving FSD in China. Tesla is the global leader in intelligent driving technology with one of the largest fleet size globally. Although current range and timeline of approval for Tesla's FSD entry into China market is still unclear, its potential entry will drive the awareness of intelligent driving technology among China consumers and stimulate intelligent driving technology development in China. Leading auto companies with large fleet size to collect high-quality road and driving data is likely to build a more sustainable mode in intelligent driving era in China. So next, let's look at this key policy update. So on 26th of April, the detailed plans for vehicle trade-in program was announced. In terms of range of subsidy, ICE with emission standard of National 3 and below, and NEVs registered before April 2018 are eligible for scrapping, and consumers that purchase new ICE models with emission of 2.0 and below will receive RMB 7K for subsidy, and consumers that purchase NEV models will receive RMB 10K in subsidy. So the scope and amount of this subsidy actually both exceeded the previous market expectation. And we are seeing that research institutions actually expect the new policy to bring around 1 to 2 million of incremental sales in 2024. On EV penetration, although China is already the global leader in EV development and has the highest EV penetration, we are seeing that China's EV penetration actually is on a continuously expanding trend in the past month and past years. So this is mainly driven by the launch of new models, attractive new models. So according to research institution, the launch of new models are more likely to drive new demand instead of cannibalizing the existing demand, so that the launch of new model can effectively drive up the total sales volume for EV. So in addition, the continued promotions and improving infrastructure and awareness especially in lower tier cities, will also drive further increase of EV penetration to over 40% in 2024. As Chinese brands have launched EV models that cover different price ranges that cater to the different consumer demand, we can also expect continued share gains from Chinese brands in EV era in China market. Next, on the largest concern of the market, which is price competition. Since Tesla lowered two of its model prices at the start of last year, 2023, we see majority of China EV brands follow suit. Price competition remains fierce as we enter into second quarter of 24. As we can see here, there are also over 20 EV models lower their prices in every single month in the past 3 months. Price competition impact on the profitability for these China EV brands has been a major concern of the market. Although we also expect price war to sustain throughout 2024, we are seeing several positive factors, including battery cost reduction, economics of scales, and technological leadership of these leading companies, product mix upgrades, and overseas expansions that can potentially mitigate the profitability pressure. So we look at BYD results. BYD reported its first quarter result at the end of April, with its net profits growing double-digit year-over-year, which was largely in line with market expectation. Notably, its NEV gross profit margin actually expanded by an impressive amount year-over-year, driven by even amid the very fierce price competition throughout the quarter, driven by higher contributions from these premium brands and its effort to expand overseas, as well as its supply chain cost reduction, though partially offset by the unprecedented price cuts throughout the quarter. Though current industry price competition showed no signs of easing, as majority of OEMs still prioritize an EV market share over profitability, the solid profitability for BYD actually indicated the capability of these leading brands to weather through competition thanks to more appealing product and higher operating efficiency. But however, on the other hand, we see the intense price competition weigh on Li Auto's performance. The company just reported its first quarter results last night, followed by a substantial sell-down in the US market overnight. So the net profit was down around 9% year-over-year and lower than market expectation. This was mainly due to the higher than expected operating costs. The key disappointment was that the management unexpectedly announced the delay of its BEV model launches from previously scheduled second half of this year to first half of next year, first half 2025 and beyond. And instead of launching altogether, the new models will be launched in sequence. So although this could be the right move for the company as the management, for the management to realign strategy after the disappointing mega launch for Li Auto, the delay could also lead to the lack of share price catalyst for the stock throughout the rest of this year. Next, Xiaomi. Xiaomi and Huawei are the disruptor for China's EV market. Xiaomi has successfully launched its first EV model, SU7, at the end of March. So around 1 month later, Xiaomi has logged around 75K orders and target to deliver 100K in 2024. This will make Xiaomi's SU7 to be one of the most popular EV sedan in China. So also for Huawei Ito, its new M7 has been gaining popularity among consumers since its upgraded delivery in September last year. And Ito also successfully launched its high-end SUV M7. Both models are among the most popular EV models at their respective price range in China. As leading tech companies in China, Huawei and Xiaomi can better integrate its EV plus smartphone plus IoT ecosystem and provide more intelligent and interactive driving experience for users. This also enhances the user perception on intelligent driving function and make intelligent driving becoming an increasingly important selling point for EV in China. So lastly, on EV, we are looking at this overseas expansion. So with the increasing EV penetration and fierce competition in China EV market, EV export or say overseas expansion has been a key strategy for these leading brands and a very important growth driver. China auto export volume reached 4.9 million in last year. So this has made China become the largest auto exporter globally, and export volume is still expected to be growing at around 25% year over year in 2024, with the continuously increase in EV penetration. The diversified model offering, cost advantages, and improving brand awareness will continue to drive the auto export growth. We all see the news that US will raise its tariff on China EV from 25% to 100% to protect its domestic EV market. But the impact on China EV export might not be as large as the headline indicates. US only accounts for a very small portion, like low single digit of total China EV export in 2023 under its current tariff landscape. There are also concerns over EU market that EU might impose higher tariff on China EV brand. But we believe that BYD and other major Chinese companies are expected to overcome this issue by building local assembly facilities in Europe. In emerging markets, middle-income countries across these regions, such as ASEAN, Middle East, and Latin America, we are seeing higher potential as China EV brands' value for money proposition is very appealing to consumers in these markets. Therefore, we see large potential for Chinese EV to penetrate into these markets. The second part, I will briefly talk about the recent update on China battery industry. First, also in Beijing Auto Show, CATL unveiled its Shenxing Plus battery, the world's first LFP battery with 1000 km range and 4C superfast charging. Shenxing Plus can achieve 600 km range with 10 minutes charging, a significant improvement against the 400 km range in 10 minutes charging for its last generation of Shenxing battery launched in August last year. The substantial improvement in battery energy density and charging efficiency within this short time frame actually indicate CATL's leading R&D capability that could support its further market share gain globally. Also on the capex, with the rapid EV demand growth and battery capex shortage over the past few years, when China first saw this EV boom, battery makers rapidly increased their capex plan to increase the battery capacity, as we can see in the battery capacity hike cycle during the 2021 to 2022. The result is that going into 2023, there has been oversupply in China battery sector, leading to spiking up of battery inventory and low utilization rate for its capacity. As the battery maker gradually realized the overcapacity issue, we can see that the total battery capex actually start to gradually decline from 2023 onwards, to a rather rationalized level. We expect capex normalization will drive the gradual rebalance of this demand-supply dynamics in China and lead to a gradual recovery in utilization rate, support a normalized competitive landscape in the China battery sector. On battery inventory, with the continuous EV sales growth and the rationalization of capex and capacity expansion, we are seeing a gradual normalization of this demand-supply dynamics. According to data from the research institution, global battery inventory month actually dropped to around 1.5 months in February this year from around 3.5 months in January 2023. The rationalization of industry behavior can lead to a more benign industry landscape, which can support a better profitability for leading players. In addition, despite the intense industry competition, leading players such as CATL has actually demonstrated very strong product quality and R&D advantages, as shown in its rapidly product iteration, leading to a continuous share gain globally. Its better than expected financial results in the past 2 quarters also enhance market confidence in this battery leader. So lastly, let's look at the battery raw material prices. Battery material prices decrease has also been a key factor that drives the battery cost decline so far. We see these major battery material prices, lithium products, have declined from its peak of over 500K per ton in 2022. Although we see a rebound in mid-2023, now the price has declined to around RMB 110K per ton. As battery cost is a major cost for EV, OEM and battery makers will both benefit from the low battery material prices. In addition, we also see that the material price trend actually showed a sign of stabilization year to date, which will support a more robust EV purchase demand as consumers are less likely to adopt a wait-and-see attitude for their EV purchase. So for EV brands, raw material prices decline coupled with product upgrade and overseas expansion will help them stabilize profitability in this highly competitive market. So in the longer term, we believe that leading China EV brand and battery maker will continue to benefit from the trend of auto electrification globally. So this is the content of my sharing. Thank you for your time today. See you next time.